Hymns House, episode 39. My name's Jonathan Stern. I'm here as always with Patrick Lester, who goes by the name Bayside in the Hymns House Discord. We are joined today by David Maris, one of the most decorated sell-side analysts in healthcare and pharmaceuticals ever. David was voted the number one healthcare/pharma analyst 6 times by Institutional Investor and number 2 or number 3 most other years. In addition to working on the sell side for Credit Suisse, Bank of America, BMO, Wells Fargo, and even Bear Stearns back in the day, he had a 2-year stint as the healthcare portfolio manager at Balyasny, a blue chip hedge fund. In addition to his impressive experience, Smart Money once honored David as the last honest analyst for his unwavering integrity under pressure. He was the only analyst to warn on Elan, BioVale, and Valiant before each collapsed close to 90%, and he is the only analyst to have ever been sued by an issuer for more than $1 billion. He was sued for $4.6 billion by BioVale. Crazy stuff, David. David currently runs his family office, Phalanx Investment Partners, and is also a founder and partner at Wall Street Beats, a new platform where he and other experts talk about their trades. I would encourage all of you to sign up for Wall Street Beats if you haven't already. The link should be below in the show notes. David Maris, welcome to Hymns House.
Thank you very much for having me.
Okay, so as I just got finished talking about, you're a legend in the healthcare industry. Hims is, of course, healthcare, but it's quite different from the traditional healthcare companies you've covered over the years. You've consistently been bullish on Hims, though. In fact, you called it a buy on the Wall Street Beats podcast last year when it was trading around $15. So I'm curious, what initially got you interested in Hims?
Yeah, so you're right. I usually do pharmaceuticals, biotech stocks, therapeutics. To me, growing up in that business, it was always very easy to mentally do that math. I don't know why. Some people who grow up in autos just understand production costs and whatever. For me, it was easy to multiply the price of a drug by the number of patients, figure out the margins, and figure out how profitable that's going to be. But what attracted me to Hims is the growth. You just don't see that growth on that large a number over a period of time. And so it was, and the fact that it was growth in subscribers, which is a sticky business. I love that. Like, to me, that was, it was really not just the revenue growth, but it was the basis of the revenue growth, that it was subscribers across a multiple of different therapeutic areas. So they weren't just selling ED drugs. That was kind of what people thought at the time. Just a year or so ago, it wasn't that controversial at $15. Like, it was, to me, it was a no-brainer. It was. Yeah. I forgot which baseball player, I'm not a big sports fan, but who said it, that someone asked, how do you hit so many home runs? And he said, well, it's like I see it like a watermelon in slow motion approaching me. That's when you see a certain companies, you go, oh, I get this. I've seen this before. This is a home run. And to me, that was very clear with Hims.
I think even Bank of America, who's reiterated their bearish take close to 15 times this year, even Bank of America was bullish at one point, and maybe it was around the time that you were saying buy. We'd have to line up the charts there.
And that's really interesting. I'm sure we're going to get into it, but that's what's interesting is that you can be really enthusiastic at $15 and then at a different price be like, look, I still believe in the company, but the valuation doesn't get you there. And that's probably where some of the Hims fans and I disagree. But we'll get into that, I'm sure.
Great. And so I want to come back to what you said about subscriber growth, because there might be a slowdown, at least in new subscribers, if you account for churn or for some other things. But we can click into that later. I want to start with some recent Hims news and get your thoughts on that. They recently announced the acquisition of ZAVA, the European telehealth company, operations in the UK, Germany, France, and Ireland. We don't know the price tag yet. Revenue whispers are close to 100 million. I think that's euros. Some are saying Hims got him for like 3 times revenue. So, 300 million euros could be close to $350 million. Again, no 8K yet, so we don't know the official number. When you saw the news that Hims was expanding to Europe, what did you think?
Yeah, so one of the things that you didn't mention, I have also been a public company board member. And so I know what boards go through when something like this happens, or good boards. Now, I'm not on the board of Hims, so I don't know exactly. But so the questions that would pop up in my mind are very board related questions, like, can we do this?
Great.
Do we have the capability to do this? As a management team, yeah, we're really smart. We all think we're smart because look at the stock price. But do we have the ability to multitask? And it's not just multitask, but you physically have to be there so many times a year just so that your employees, you have a handle on what's going on. Now, the new COO might be able to do a lot of that heavy lifting, but those are the real strategic thinking, the real questions behind it. If I were meeting with management today, I'd say, like, walk me through that you think you can really do this. And then the reason why, right? If you're growing so well in the US, why do this? Now, I think Mark Cuban actually brought it up on your previous podcast of like, look, you have a great brand. You can duplicate this a lot of different places. Can you duplicate it with a low risk strategy where you're not taking on a lot of debt? Okay, they've done that. That's good. Can you do it with operationally where you're not distracted from executing? Number one goal for them is to execute on what they're doing here. If they get distracted one iota and it shows up in the results, no deal is worth it. Now, you mentioned the purchase price. We'll find out. But to me, it's
is the whisper, is the number I floated in line with what you
that could be that it could be, but I think it's immaterial, right? For their size market cap, their size business, the numbers are immaterial. Whether they pay 5 times or 3 times or 2 times, they're not like Merck buying an operating company. There you really want to look at what are the synergies, how much cost can you take out, and you want to look at return on invested capital and you can do that. You can say, okay, and a few years after the deal, you can figure it out if it's not a pipeline thing. When it's a pipeline, this is how I'd consider this. When it's a pipeline, you have to think of it as, okay, this is either win or lose. It's possible that it's just a dud and they can sell it for some damaged price, so 80% or 50% of what they paid. But I'm not so concerned about the purchase price as then what can they do with it? And that we won't know for a few years. So if the price is way higher than what consensus or what analysts are expecting, or if it's way lower, I wouldn't say they got a bargain or because if it were, let's imagine it's $50 million. Oh, they got a bargain. Well, it's not a bargain if it's a dud, if they threw away.
Distraction. Yeah.
Yeah. So I would say that other than it being like a multi-billion-dollar deal, which they would have had to already announce, I would say that it's probably immaterial. It's definitely immaterial on how I think about the stock.
Does the price react when the 8K comes out if it's 500 million?
I hope it does, because like where the stock is now. It's, to me, is about execution and volatility. And so volatility can be a great friend when you're looking to buy stock. So will it? It shouldn't. So I don't want to predict anything on that, but it shouldn't.
Cool. Let's move to Canada. Just announced expansion there as well.
I'm not moving to Canada. So
yeah, I'm not either, David. Hims is expanding to Canada to sell generic semaglutide. What do you think about that expansion? Thoughts on like market size and incremental revenue that it might add in 2026 when the patent goes off?
So it's a little bit the same of what I was saying before of like, is it a distraction at all? But in some ways it's much better because it's closer. The language, other than adding French to every mirror website, the language is the same, and getting there is easy. Time zones are easy. Everything about it is pretty easy. Obviously, you do add some layer of complexity, but to me, it's a no-brainer. And then you get the with the patent expiry earlier, you get sourcing and experience with that type of sourcing. Not that that's going to be in place necessarily in the U.S., but it does give you an advantage.
One follow-up before I turn it over to Patrick, who has some good questions coming, but it's on the lapse of the Novo patent. There's been some speculation about like what the heck happened there. I'm sure you've thought about it. Like, was this a mistake by management?
Yeah, that's what
it seems. Or is it something deeper? There was some article in some law journal or it was some newsletter. Gosh, I wish I remembered the name of that legal publication. But apparently Novo is claiming that it was not a mistake, right? That it was intentional.
So Novo has had a lot of bad press the last probably 6 months or so. And probably 2 months ago, they were starting to get a lot of bad press about being slow, that the reason that they're losing against Lilly is because they're slow and they're inept, which I don't think is true, but I think that they just don't have as good a product as Lilly does. But the press was starting to blame them, and then they put this on them. From what I've read, it sounds like it was a mistake. Novo clearly is not going to, if there's any way they can explain that it was not a mistake, they should do it much more forthrightly rather than saying it wasn't a mistake. They should really give a whole explanation to it. But to me, somebody or a few people probably were fired for that.
All right, let me step in with some questions. By the way, I have heard, and I do not know that this is true. In fact, what little research I did, and it suggested isn't. So take it with a gigantic grain of salt. But at least some people have suggested that a possible reason has something to do with the importation of drugs from Canada to the US, and that a generic drug cannot be imported, and that had something to do with it. I don't know if that's true, but it's been alleged.
And it could be. To me, the real question is, does it matter to HIMSS? And if their goal is to, hey, I'm going to be in Canada to be able to import generic drugs, and maybe that is an important distinction to know. Mm-hmm. To me, I think their real goal is, hey, we have a great brand. Why don't we start to expand? So,
right. Let me shift to my other question. Jonathan has been talking a lot about various sort of recent news items. Probably one of the biggest one in recent weeks has been this this Novo question. Hold on a second. So as you know, and as the folks who are listening know, Novo and HIMSS had this partnership. I mean, that was great. It seemed to take the lawsuit risk off the table. What was out there was this possibility of a much bigger and deeper partnership that could have potentially included Europe, since that's where Novo Nordisk is located. And then all of a sudden, it completely imploded. There was a whole lot of drama that day with some of the press releases that came out, and then there was a Washington Post article afterward describing it from HIMSS side. Apparently, it came as a surprise. So a whole lot of drama, and it had a big impact on the stock price. So my question is, what do you make of that deal and the subsequent implosion? And what do you think about the implications for litigation or any other adverse decisions, maybe by the FDA? Are those back on the table now? What do you think?
Yeah, so if I saw some speculation that there was maybe Novo went into this deal with the idea that they would cancel it right away in order to learn what they could, and then and that's just, to me, that would be ridiculous. If Novo would be that stupid, and they're not. They're a professional, great company. So I don't now. Do sometimes individuals make really bad decisions? Yes. So I'm not going to say it's a 0% chance. I'd just say it's a very, very low. But if that's the case, then HIMSS would have an amazing case because you can't enter into an agreement, a legal agreement, with the idea that you're not going to fulfill it. Like that's just not, that's kind of really, really wrong. So I don't think that was what happened. Is there a story probably behind the scenes that's not been told yet of much bigger drama of personalities? It usually comes down to personalities.
Yeah.
The understanding of what each company would and would not do should have been covered in the paperwork very carefully. And what may have happened is, in the rush to get something done, that it wasn't properly covered, and HIMSS was in its right to continue to do what they were doing, and Novo was in its rights to say, we're not going to continue with this deal. We should have, in parentheses, I guess we should have clarified beforehand that we didn't want you to keep doing this, but we didn't clarify that enough legally. So I can't sue you for doing something that's against the contract that we signed, but I can cancel the contract and say I can leave whenever I want. But I don't think it's anything more like devious than that. I think that's probably really what just happened. I don't think there was some sort of secret agenda by either party. I think that would have been a great deal for HIMSS in the limited sense that it let them sell a cheap GLP branded drug.
My speculation, which I think I shared on the last podcast, and this is speculation, was simply from reading through the Washington Post article afterwards. It was clear that the Novo decision caught HIMSS by surprise.
Yeah.
And the only way in my experience, you have a whole lot more experience, so I would love to hear what you may think about this theory. In my experience, when you're operating with high-level corporations like this, they don't tend to catch each other by surprise. If a deal is not going the way people expect, then you sort of communicate that and say, okay, well, we'll put out a very good, positive tone, like we gave it some consideration and have decided mutually to part ways, something like that. It didn't go down like that, which is not what I would have expected. And given that, at least from the Washington Post, there was some communications that were friendly, going back and forth between the head of the U.S. piece of Novo and Andrew. So it struck me that probably the decision may have caught him a little bit by surprise. Not like that day it caught him by surprise, but maybe in subsequent days. I thought the fact that the HIMSS CEO position was up in the air, that seems like a time period when board politics probably play a pretty big role. And I speculated
Novo CEO, is that?
Yeah, the Novo CEO's position was up in the air, and I speculated that board politics in the absence of a new CEO may have played a role, and that may have led to the outcome that we had. That's of course pure speculation.
In my experience, so first I'd say we're not going to know until someone on either side, and actually both sides, really let us know, and that will probably never happen. My guess is that you're probably right. There's something of, I'm being made fun of in the press. This isn't working out as this deal didn't work out as a great thing for my stock price. And I mean great, like it wasn't amazing. And we need to, like anyone who has a toddler knows that at some point, or an adolescent, that they try to assert authority at different times.
Oh, don't I know it?
Yeah, and I'm not saying that Novo was being a toddler, but both sides in something like this, I could very much imagine a young, high growth company saying like, hey, too bad. And a very established, long history with an amazing pedigree company saying, you can't talk to us like that. Like that's just, we're your partners. We can't. Pharma companies rarely blow up things right away. They're steady. They're for every one person that HIMSS has on a deal team, Novo will have 10 people. Right. It's the margins that they have to have great expert advice. This did seem like out of the blue, we can do this because we can. But my guess is that there was either a personality clash or something where somebody made a very, very rash decision either to go into the deal or to exit the deal. I think that it was a mistake. By the way, to just continue 1 second, I think it's a total mistake by them.
Okay.
because I think that HIMSS is going to develop into, if it's successful, it could develop into a real, very large platform for selling and marketing healthcare in a lot of different ways. And by taking themselves out of the optionality of that, they've just cost themselves.
We are going to come back to that. We're going to come back to that a little bit later because I want to explore that. I guess my last comment and quick question. Comment is that the toddler reference was funny to me because I have a 3-year-old.
I was about to say I can't wait to tweet David Maris. David Maris calls Novo
Yeah, don't say
toddler.
again. They may have
Before you give a response, and I'll give it back to you. So I do have a question. Tell me what you think about going forward in terms of litigation risk. But make the point you were just about to make.
Yeah, well, first, I wouldn't say that Novo, because it may have been one side, the other side, and HIMSS and Novo said, "Look, I'm not dealing with this. Screw off. I'm sorry, my approach, but that's it. I don't want to deal with it."
Yeah.
I think the litigation risk is very low. I don't think that either side really wants to have discovery in this, especially Novo. You're going to start suing partners that you did a deal with. What due diligence did you do? You'll look like, well, wait, you did all this. Either you did a ton of due diligence, you entered into a deal, and then you didn't know something that you killed it right away, so you look silly, or you didn't do enough due diligence, in which you look silly. Someone else brought up previously about damages, like you'd have to actually show what your damages are. That would be difficult to do. So I think it would be low. I think that the likelihood of that happening is extremely, extremely low. I think both sides are smarter if they stay away from it. If anything, if I were HIMSS, I'd consider it, but they don't need that distraction either.
All right, Jonathan.
I want to talk a little bit more about GLP-1s, the market broadly. Let's fast forward 3 years. What does the landscape look like in the United States? Where do you expect Novo, Lilly, and HIMSS to fit in? And then I'd like to follow up about some potential others that should be on our radar. But let's start with Novo, Lilly, and HIMSS.
Yeah, and to go back to your first question of like what attracted me first, because it is important for this answer, like this was before GLP-1s, and when it was $15, and some of the pushback that I got on my own team was like, this is crazy, whatever. When GLP-1s came out, and I said, well, just take the business without GLP-1s then. I mean, it's super cheap without GLP-1s. 3 years from now, Lilly will have even greater market share. Novo will have lost more market share. They may have a combo drug. They may not. Others will have, there will be lots more.
Real quick, who may have a combo drug and what does that mean?
Novo, they may have a dual action drug that, they've been working on. I'm not sure if we haven't seen the best drugs already. And that sounds so anti-science and the rest. But if you think about Lipitor, eventually they came up with a statin that was, hey, we're not going to get much incrementally better than this. So what are we going to keep throwing money at? I think Viking has a bit of that problem, right? It's been a couple of years of people going, they're a takeout candidate, sort of like doing a rain dance, really hopeful. And eventually maybe a deal will come around, but it will have nothing to do with like them cheering it on as happening. I'm just not sure there's a lot of data coming. I mean, Chinese companies are working on it. There's so many companies working in this area that it's possible, but the manufacturing alone is so expensive. Who's going to put up the billions and billions for that, plus buy out whoever it is working on it to do it? It's interesting. There probably will be better drugs that come out. So I just to backtrack a little bit on what I said, but in 3 years, no, it's going to look a lot like it looks right now.
All right. So your sense is tirzepatide's far better than semaglutide, and the market will continue.
Yeah, so it's going to continue to go to that, and
okay. And then
now when it does go generic, When generics enter the market, the entire world is going to change, because right now, if I'm paying out of pocket or insurance, yeah, I want the most effective drug. All of a sudden, I have a super cheap one. Every insurance company is going to say, you have to go to that first. You're going to have step therapy. Or Lilly's going to have to lower their price so much that then it becomes more competitive. So it's good for patients, but
one thing we haven't talked much about on the podcast is Viking Therapeutics. But you mentioned them. I'm curious, what are they up to? Are there other biotech or pharma companies? You mentioned the Chinese company. I saw something about a very impressive result last week in the news. Are there any others that should be on our radar?
Oh, yeah. I'll send it to you after this, of a spreadsheet of the ones to keep on the radar, because there are a dozen. The Vertex had data over this past week. Someone online did an extrapolation of the data and looks to be competitive, not great, but it's still early data. So yeah, I mean, Viking has the promise of an oral drug, and people are excited about that. Yeah. And if anyone's used a GLP-1, they know the needle is really not a problem. It's not like a needle, like getting an immunization. It's not like that at all. It's a very, very small gauge needle. But people like oral drugs more. They're pretty easy to make and blah, blah, blah. You can carry it around. It doesn't have to be refrigerated, all sorts of things. Shipping it is much easier. There are a million reasons why an oral drug wins out over an injectable drug. Whether it actually works as well is a question. Whether they get it to market is a question. So far, the safety looks similar to existing drugs. So when I say, will it get to market, I don't mean that there's some, but as they develop it, you never know what shows up. So as of right now, it looks to be similar to other drugs. I'm not a fan of Viking. I was short it for a really long time. I'm not short it right now, as it's been tracking higher lately. I've been watching it. I looked at it today. But I don't believe like individual shareholders investors should really spend a lot of time shorting unless they have a large portfolio. And I don't want to waste any time talking about that, other than to say a lot of people like their drug. I just don't think that it must not be that great if Pfizer and others who don't have programs haven't licensed it in.
Well, I'll just say on Viking, I didn't realize they were down. Yeah, they're down from really the 80s, above 70 though in October 2024, all the way to lower 30s today, scraped the 20s at one point. Anyway, yeah, Viking. Okay, back to you, Patrick.
Okay. To come back to something we were talking about just a short while ago. You made this reference to HIMSS being a platform and the possibility that Novo may regret walking away from the deal sometime in the future. I have to say that resonated with me, because one of the things I had been saying on this podcast for some time, and it's not really an original idea, although perhaps framed slightly differently, is this notion that HIMSS could be a front door for more advanced healthcare. Now, we've known over the past history of X number of years since HIMSS got launched that it's really focused on a few very high growth, high demand categories like ED or hair loss or weight loss, where the marketing dynamics probably work really well, and that has helped produce the growth that it has had. But it's always been disparaged by many because it wasn't seen as anything that was specifically or particularly innovative. But as you probably know better than anyone, and we'll probably come back to this as well, there are a lot of changes afoot in the healthcare arena, perhaps some major advances, maybe not. You can comment on that. But it seemed like HIMSS was potentially positioning itself for deals like the Novo deal, but with other pharma companies as well, and also potentially device makers. And as you know, PBMs and all that sort of thing is, they take a big share when you have to go through them. and pharmacies, retail have been suffering. So it seemed like in many ways the platform idea had a lot of resonance to it, so much so that some have referred to them or this as the Netflix of healthcare idea. That's sort of the thesis. Now, I think that thesis took a hit when the Novo deal fell apart, but it wasn't necessarily killed by that Novo deal. So I want to hear what you think. You know the broader field certainly better than we do. You've done a whole lot with it, and you've spoken, at least initially, somewhat positively. Tell us about the future. Could this idea of a Netflix of healthcare, whatever name you want to use, a platform or so forth, could it become that? And if so, how?
Yeah, so I love the phrase. I don't think it's applicable because Netflix is at the highest tier, $25 a month, and I'd argue it's a pretty good bargain. That's my view. Healthcare is, in a way, it's similar. So in a way that title might fit is that healthcare is extremely confusing. It is very expensive. It doesn't make sense that the same drug in France or in England will cost a fraction of what it does here. It doesn't make sense. It's only because that they have the power of their government's negotiating price. And there's a free rider problem for that. But worse than that is the patient experience. Patient experience in the US is miserable. So you have to get a doctor's appointment. So try to get an endocrinology appointment sometime in the next 2 weeks. You can't. And then you're going to go out 3 months and you're going to say, okay, I'm going to schedule that for a Thursday at 2:00, not knowing that whatever life's going to throw at you, whatever your boss at work's going to throw at you, whatever's going to happen, you have no idea. Then that Thursday rolls around and you're in trouble and you can't go to that appointment. You're another 3 weeks. And that just goes on and on and on. So HIMSS solves that for a big number of patients. And so the idea of simplicity and access and high touch is very important. So that's where the Netflix thing doesn't, like, Netflix doesn't call me and say, hey, by the way, have you watched, how did you like that movie? Like there's no high touch model there. And HIMSS has that. The reason that it's difficult for HIMSS to get to be a big platform like that right away is that it's sort of when we talked about the international expansion, each new therapeutic area, each new vertical creates a whole new supply chain dynamic, management dynamic, advertising, marketing dynamic, IT dynamic, a whole bunch of things that you can't just roll it out and say, oh, by the way, we're a pharmacy, come get whatever drug you want. They're actually interacting or having people interact with patients. And so it's way, way more complicated. So I think they'll get there. I think one of the recent board appointments was brilliant for this strategy. I think that they're thinking that through carefully based on what I can see by their management moves. But it's not something that can happen right away. Like, why don't they roll out, and a lot on the HIMSS House channel always add, like, why don't they roll out this? Why don't they roll out that? Yeah, that's great. They probably have not, you probably haven't thought of something they haven't thought of, but it's the complexity of doing it and the time that it takes. They can't just, and they have to do it in 50 different states, each with their own regulations, each with and so it's very, very complicated. That's another thing that I love about it, because that's a moat. And once you get those rolled out, I think it will be a platform, because it just saves so much time. Now you can't get your blood pressure checked via HIMSS. Right? There's very simple things you still need a doctor for. But I think Mark Cuban said, yeah, a lot of people are hesitant to want to talk about weight loss or erectile dysfunction or eczema or something with a doctor. Okay, that solves that problem too. The HIMSS solves that problem too. So I think they are already a platform, but they just need more verticals to really convince people of it. But to touch on also, you mentioned about Novo and walking away from the platform. I've said all along, if I were private equity or if I were CVS, or if I were a large drug company that has a lot of different verticals, this is a no-brainer. I mean, it was at 15. At $10 billion, then you're taking a much bigger swing, or 15 if you'd have to buy it. But we can talk about that if you want. So.
Are you saying for a private equity company to buy Hims, or for CVS to buy Hims?
Yeah, to me, that's what they're building this to sell it. They're going to say that they won't. No one says, and no management team ever says, yeah, we're buying it to sell it. But it's so clear that it's at the nexus of, you want to get closer to patients. There's a group called Patients Like Us. 10 years ago, it all started when drug companies decided to, let's make communities and we'll get people involved. So they would launch a drug and then they say, oh, we'll look at our webpage and join our chat and all that. They were trying to build some sort of community with patients. Well, this you can have a community of patients in a high touch model on multiple indications. Why wouldn't you do that?
All right. Jonathan, I'm kicking it back to you.
The idea that Hims is going to sell is not something that's come up on the podcast. Real quickly, what about Amazon? And
perfect.
You seem pretty. You didn't give odds that they'd be acquired, say within 3 years or 5 years, but are you able to handicap that?
Well, so the things against it, the things that are going against it. One is that you have a young management team that hasn't had, knock on wood, any big professional setbacks from a stock standpoint or from a business standpoint. You have a governance structure that is not very, that the CEO essentially controls the shares, and we should talk about that later. Yeah. And it's been growing fine without it. They don't have a tremendous amount they don't have almost any debt. So they don't need to do that. The only reason to do it is to accelerate their growth, and to have, if the insiders are saying, you know what, at $1 billion, I can walk away with $1 billion. That's pretty good. Now, if he waits a few years, walk away with $3 billion. But that's, if I'm the CEO, the difference between $1 billion and $3 billion isn't that great.
Anything about Andrew Dudum specifically that leads you to think Hims is more or less likely to sell?
Well, that's what I said. He's young. So that's one reason. A lot of times people sell if they're young. I've seen a lot of founders sell when they're young because they want to do something else, like another startup. It would be hard to imagine you're going to do another one that's more successful than this. I mean, it's on a really good trajectory. But likewise, one reason to do that is to bring in more experienced management. That's always a challenge with young management teams. Sometimes you have to. You're the founder and you're fantastic. You've done a great job. You are the person to carry it forward. Okay, we need to change. We need X, Y, Z. And I think that's why they brought in the COO. They've brought in some new board members. And I think they're doing that. I don't think that he's given any hint that he's tired or at all bored with the business. So no, I think that it's a low likelihood. Yeah. I just think it makes sense. If I were thinking about how to grow the company.
Yeah, totally something to monitor. I mean, he comes from a background where he started Atomic, which is an incubator for a bunch of businesses. And so he's worked on a bunch of business. I think he started companies at Penn. Maybe he wants to do something else at some point. I don't know. Yeah, to your point, I think it's clear he's not bored at the moment, but we'll be tracking that if there's any way to do so.
So Kare Schultz is a new board member. I would tell
is that how you pronounce that? I've been mispronouncing that.
I can pronounce it anyway. Yeah, that's how I would pronounce it. But when I used to cover Teva, I knew him well. I will tell you, he's incredibly impressive. His background at Novo is incredibly valuable for this, not just GLP-1s, but multinational organization. So he is a fantastic addition. He is honest and he's a straight shooter from what I've seen. I don't think he's been at a Coldplay concert anytime recently and stuff. So I think I really do think he's the real deal. Like that, he's someone that you just know that they're not fooling around when they could get him as a board member. That he's serious and he's good.
And has a Novo background, of course. So like, odd that he didn't intervene or, I mean, is there anything he could have done to save him?
No. He has a Novo background. On top of that, he has a generics background.
Yeah.
And so as they expand to other areas, TRT is genericized. So he'll be able to source it for next to nothing. He's going to be a great addition, or he is a great addition for helping them through these things.
Great. I want to pivot to something that you jumped in on Twitter recently. So I'll just go through the background here. In mid-June, so I don't know, 40 days ago, Andrew tweeted that in a study of over 90,000 participants, we're seeing 60% clinical adherence and retention after 3 months, meaningfully surpassing benchmarks available to date on commercially available doses. As I said, there was some pushback by notable bears on Twitter. I think you definitely chimed into the debate as well. I don't know if it was sharp disagreement, but you essentially said, I think you need to be a little bit more charitable in your interpretation of the actual data. First question, and this can be relatively quick. What do you think about those numbers? Is 60% clinical adherence and retention after 3 months on a personalized dose impressive?
Yeah. So just to be clear, because you made it sound like I was pushing back on Andrew. No, I was pushing back on one of the bears who said,
on the bears.
Yeah, who said, "Oh, this is below what was seen in a clinical trial." And I argued that, well, look, in a clinical trial, people are paid. You're also seeing your doctor, and your doctor is getting paid too. And it's not easy to just quit a clinical trial. I used to be at a drug company that ran clinical trials. So as part of their business, they had a CRO, and so I know like. You don't want people to drop off at all because it ruins the data. So
All the attrition.
Yeah, you hate that because then it ruins the study. Maybe people did that because they were having bad side effects and you didn't record the side effects, and it's just not. So my pushback wasn't going through the exact data. I mean, I did go through the exact data and said, look, it's stupid, but it's more the idea that, look, Andrew had something that he should be proud of. Our high touch model keeps people on drugs. Our personalized medicine may also be doing that too. That's not how he would phrase it. He would say it's the personalized medicine and the high touch model. But I would say, you know what, having someone call you and say, oh, you're really nauseous. Okay, why don't we dial back the dose for the next few weeks? Okay, let's see how your body responds. And oh, you're not losing weight. Let's up it a little bit. That's very different from a lot of endocrinologists. If you ask patients, you say, well, I don't want to know about your endocrinologist because everyone loves their own doctor. But have you heard of anybody really? Has your doctor ever reached out to you honestly and said, how are you doing on this 3 months in? They might say, oh, 3 months from now, come do labs. But so it's, no, I thought it was just a snarky comment from somebody who's negative. And it needed to be addressed.
Great. Follow-up is about personalized medicine specifically. It's just massive in pretty much everything Hims does in terms of branding. They're now taking out full-page ads in the New York Times and Wall Street Journal. They talk about it on every quarterly earnings call. They have some chart about the number of subscribers that are on a personalized treatment plan. Question to you, David, is it mostly marketing, which is what Mark Cuban says? Is it an attempt to exploit the compounding exemption in the case of GLP-1s? Or is what they're doing actually innovative and a step forward for healthcare?
Yeah, so one of the bears came out today and said something like, that ad in and of itself shows that they're doing something bad. And I want to be clear, the law is the law. It allows them to do this. Should the law be changed is an argument that should be had, and let legislators have it and let them look their patients in the eye and say, yeah, no, we should take away this personalized thing. Is it being used to the fullest extent to help HIMSS? Absolutely. At least that's my guess. Do these drugs really need to be titrated in doses that aren't available? Probably. Like there haven't been a lot of articles of the number of patients that have ended up in the hospital with, bowel issues or in incredible pain because of bowel issues. But I've talked to emergency room nurses about this, and it absolutely happens. So these drugs are really serious drugs that need to be titrated. And maybe existing doctors aren't doing that. Well, that doesn't mean you can just bypass patents just because other doctors aren't doing their jobs. But from what I can tell, they're following the letter of the law. And, so to me, it's, I saw the ad. I didn't have the same reaction to the same person that I had argued about the other issue. I was going to say something, and then I said, it's not worth it. He's arguing about, and ads in the New York Times, I would imagine, are pretty cheap nowadays.
Huh.
Yeah, someone replied to my post like, it's only grandparents who are reading the New York Times. What is HIMSS and hers thinking advertising in these publications?
Yeah.
That's funny.
In any case, back to you, Bayside.
Okay. I want to shift back to something. It's actually a little bit more timely for me because I put out some analysis, and since I'm sort of seen probably appropriately as normally a bull, I think I raised a few eyebrows by agreeing with some spending trends that at least were a concern to me. So I'd love to kind of hear what you think. So what am I talking about? More broadly, there's been some analysts out there. I think Bank of America, amongst the official analysts, has probably been one of the best known on this. They've been basically saying that the core HIMSS categories outside of weight loss have been slowing down. And again, it's been a concern of mine too, one that I've been watching for some time. We don't have great data, so you have to read the tea leaves. So it's something that's easy to argue about. But even among those who agree it's happening, and not everyone does agree it's happening, there are different theories as to why. One is that HIMSS is simply appropriately apportioning its marketing dollars where they will do the most good, and there's essentially nothing to worry about. Others are more worried. I have wondered if customer acquisition costs might be getting higher with competition. There also have been some HIPAA related changes by Meta and others, which could be a potentially affecting what normally would be very effective ads. So there are a lot of different takes on this. One is it's not happening. Others are that it is, but it doesn't matter. Or others, it is happening. It's something to be worried about. What do you think?
Yeah, so we've heard about this K economy, right? That the people with money are doing fine and continuing to spend. People with less money are kind of holding back a little bit. There's been mixed data on it. This last week, retail data looked really good. So I'll tell you how I look at it rather than, or how I, as an investor, think about it rather than what do I think of the data? Because I saw it, and it's my data versus your data versus, and I run the internet hit data that everyone does as well. And I think this second quarter results are probably the most important in HIMSS's history.
Right.
This is, you have seasonality that they've highlighted. So reading the Q very carefully. So I'll give investors a secret here. Reading a Q carefully is important. The risk factors are something that they take very seriously. And they have to be put in the order of the risk. Most people don't know that. They figure it's just a list. It's very clear that HIMSS says that the impact of GLP-1, of the change of the shortage designation by the FDA, has had a negative impact. It's also very clear from their Q that they say seasonality happens and we expect it to be negative for the second quarter. All right. So does that make me think like the spending in that context is part of that warning? Probably. Do I think that there's something unique going on about overall spending in the marketplace for these? We are well into the GLP-1 story, so maybe fewer people are that, like, that initial wave is not there. I think we're going to find out with the quarter. I think that this is going to be a really important quarter. I'm not going to read too much into it. It's like the weather forecast. It sounds concerning. I don't know if I believe it. I don't want to be a fool and just be like, oh, and I don't think investors should be a fool. Oh, we made really a lot of money on this in a short period of time. It's disloyal to sell some stock. It's not. The stock doesn't care. The company doesn't care. You can, I'm sure that Andrew would be in agreement that if you can make money on my stock, go for it, whatever way you want. It's not like the insiders are holding every share they've ever gotten.
All right. Jonathan.
Did you have any follow-ups on that, Patrick?
I think on that particular topic, I do not.
You're good. Okay.
Yeah.
I just want real quickly, because we're approaching earnings. This will probably come out tomorrow, Tuesday, July 22nd. So we're like 12 days off, something like that. Maybe 13. You said this is the most important quarterly earnings report in the company history. It sounds like presidential election, or the way that certain people think about presidential elections. Are you mostly looking towards the results that they report, or towards guidance?
If they maintain guidance and you still see goods, I'm looking more for subscriber. I'm looking more at subscriber growth and revenue growth. And will their full year guidance be achievable? What I'm hoping that they did is that when they gave guidance and they gave second quarter, parentheses or bumpers on what to think about the quarter, that they were being conservative. Good companies do that, right? Early in a year, be conservative. Later in the year, as you see the year progress, then you can be a little bit more aggressive. That's why when companies miss their first quarter or second quarter after guidance, it's so shocking. I'm really looking at a bunch of things. First, I want to see, are they still growing? I don't care. It's not that I don't care about GLP-1s. I care about weight loss overall.
So
I care
including oral.
Yeah, because if people are coming to them and then saying the margins are higher and it's a great customer to have, you're helping them at a very low price point. Like we know there's going to be some sort of hit, but I want to see overall customer growth. Is it still, now, law of large numbers, it doesn't matter if it comes down a little, but are you gaining a similar number in an absolute number? I want to hear about the new, categories. When will they launch? I sent them a fairly long email several months ago, 6 months ago. And
when you do that, do you just reach out to IR, or what do you do?
I reached out to IR and I said, hey, here is what I've learned as a number one ranked analyst, and this is my advice to you. Coincidentally,
as a shareholder as well.
As a shareholder as well.
As an analyst.
Yeah, as a shareholder as well. And at that time, I owned a lot of shares. And I said, first, make the argument that you're democratizing healthcare. Second, describe how you're helping low-income people. Third, talk about how your overall growth looks like, how many millions of people you're helping. Fourth, talk about new categories and put dates on them. And fifth, again, I don't have the email open, so there are probably more, but fifth, never, ever miss earnings. And what I mean by that is Allergan, which split adjusted went from whatever, $1 from when I launched coverage on it to whatever it was taken out at. It was, it was such a huge hit. I I think only one time missed earnings. Why? Because they were super conservative. If people think you're sandbagging, that's fine. Don't ever give a wink, like, oh yeah, no, we're being, like, oh no, we are going to beat that. And I don't say it to sandbag people to lie to them. It's because you don't know what happens. You don't know what expenses come up. You don't know when there's a soft pocket in the economy. So be conservative. I'm hoping that they took that advice or that they already knew it. So I don't want to be so bold as to think they're taking my advice, but if someone sent me an email that said, hey, I was number one in this sector for a long time, I think you should read this, I probably would read it.
One of the things you mentioned is that you're going to be looking to see if they talk about the new categories, launch dates, projections there. Let's shift to the future and those new categories. They've said TRT and menopause are coming in the second half of 2025. Earlier this year, you wrote that TRT, is a quote, TRT could be a game changer for HIMSS. Say more about that.
Yeah, so I think it could be $1 billion business for them. And the reason I say that is they bought this lab, right? You have to, for TRT, you have to have labs taken. And so if they can do labs at 70, now I'm going to base it on 1 million customers. Now that's easier said than done, right? That's a lot of customers, a lot of patients. But if you're charging 75 and you have to have these labs done at least twice a year, you're going to start just first, you have to qualify, like, okay, is your testosterone level so low that we can give this to you? Okay, that's the first $75 or $150. I don't know what they're going to charge for that blood test. Then the second is after you're on the drug. Okay, so you're talking $150 million, and I use 1 million because it's easy for people to kind of cut and paste of how to scale it up and down. Okay, well, right now TRT is genericized. So it's going to be great margins. Most people aren't going to, I don't want to say shop around, but they will. I mean, I guess they will shop around, but you're not going to find it much lower than a genericized price through HIMSS can source it. So, and it's saving you all the trouble of going to a pharmacy, picking it up, all of that. So yeah, that's how I got to the $1 billion. Now, could it be a $500 million business? If Patrick said, look, I think it's more like a $500 million business, I'd be like, okay, that's fine. Like I'm okay with that. Now, if you said it's a $3 billion business, I'd say you're crazy. That's not going to happen. But it's horseshoes. And if they can add a few of these and get to, you're laughing at something I'm saying, or someone's texting you, he's insane.
No, nothing you're saying. I'm just thinking about the extreme bull case. Like, what if Rogan starts talking about it? What if the market grows more than we're expecting? Is there any chance?
So that's one of the ways I approach stocks, is especially growth stocks, is you say, is there something that I can fathom that people can't see? So if you had said 10 years ago, people would be hyper focused on protein intake. People would be like, that's never going to happen. That's like the zero. They might focus on low fat. They might focus on finding the right nutrition. They might think about stacking certain nutraceuticals. But if you said no, people are going to be obsessed with putting protein in milk, putting protein on sugar. I mean, not on sugar, on cereal, protein in protein ice cream. You would have said no. Testosterone has the potential for that. Like, if people understood the benefits, and a lot of the drawbacks have been debunked at this point, yeah, I think that it has the potential, especially if you have a big base of ED users. So,
I think someone was talking about, what if HIMSS gets Tom Brady as the face of their TRT launch?
Yeah, so I see in the chat sometimes. So it's like someone posted.
Are you in the Discord, David?
Yes, I am. And someone posted someone posted, the first thing I would do for Hims is get Sofia Vergara for HRT. I was like, okay, first, we don't know if she's on hormone replacement therapy. We don't know if Tom Brady's taking testosterone. Like you should want patients that are using like the dry eye drugs where they say, oh, so-and-so is a patient. They should say they're a patient. They get going and getting Tom Brady for testosterone is really expensive. I'm sure there are much better alternatives. So
I think it was Nighthawk who threw both of these out, and he has some wonderful ideas at times. This is now the second straight podcast for mentioning Nighthawk. He'll be thrilled.
He adds lots of entertainment value as well.
He'll be thrilled that he's made two appearances now.
Him should get him for marketing, I guess. Yeah. Marketing consultant.
Let's turn to peptides. I'll hand it over to Patrick for that.
All right. We just spent some time talking about testosterone. Presumably menopause would be in that mix as well. There's another idea that's potentially a little more forward-looking. And it's been mentioned as a possible future category for Hims, and that's peptides in general. Now, just as a reminder, I know you know this, the GLP-1s, the P in there is peptide. So it's not necessarily a new business in that that's what we're talking about there, but peptides have been said to have other potential benefits and other potential uses. So let me go through some of the arguments, kind of pro and con on this. Some critics, including Adam May, who actually said this on a previous episode, and who is a doctor, essentially said a lot of this is hype. It's unrooted in reality because the vast majority of peptides are illegal. What you do, I mean, so the question is, that might be the case or maybe not. I mean, so my question for you is, what do you make of Hims' decision to buy the peptide facility earlier this year, which clearly signals that they're serious about this category? And more broadly, outside of Hims, what do you think about the category in general?
Yeah, so I hate to answer it I don't know enough about it to really have a good answer. But I would say Eric Topol had a article this weekend about it, saying exactly that look, a couple of peptides obviously have major impacts on weight loss. We're not so sure about some of these others, and off-label use, some have been withdrawn from the market. And I think that Hims has made it pretty clear that they're not going to do things that are not proven and already prescription drugs. So will they offer something that's already available? Yes, maybe, I should say. That's my answer on peptides.
Okay. I'm going to cast a broader net. This happens to be one of my topics that I like. So looking at the other categories that Hims has been considering, and I'll kind of run through a list here, and you can take them in any order. You don't have to hit them all. But it has signaled that it's interested in some of these. They include devices like wearables, continuous glucose monitors, for example. We did talk about testosterone, but menopause is also in the queue, so you can talk about that. Longevity, there's a whole lot. You can find it on YouTube about that topic and various substances, which presumably, arguably, maybe have an effect on longevity. Then there's sleep. And then those are sort of categories, but I think that we would be remiss if we're talking about the future not to talk about the role of AI and anything else, given that you specialize in healthcare and very future-oriented healthcare at that. What are these categories? What do you think about these categories or any others I may have missed?
All right. So devices, yeah, I don't see why not, right? I mean, if you're going to start to, I know a lot of people who are wearing them just to track it for health reasons. I mean, I'm not one of them, and I wouldn't be one of them unless my doctor said, hey, listen, I really think there's great information you're getting from this. But I could see them saying, why not? Like if someone wants that and they want to track it, and then maybe that makes them a better candidate for personalized medicine around weight loss, yeah, possibly. obviously menopause drugs fits exactly with the TRT business, and the testing, the clinical testing business that they acquired. Sleep's a difficult one. Sleep doctors are weird. And I don't, for anyone who's watching who's a sleep doctor, I don't mean you specifically are weird. What I mean is that they really protect their businesses. They protect them really well. Like sleep apnea, in Australia, you can just walk into a store and buy a sleep apnea CPAP machine. In the US, you absolutely can't. You have to have a sleep study. It's expensive, whatever. There's no good, I don't believe there's a great reason. If someone wants to put a hair dryer on their face, they're not going to kill themselves. So make it available over the counter, whatever. Sleep doctors, don't send me any emails about why that's stupid. Please leave me alone.
Too late.
Yeah. But could they talk about like magnesium and sleep? Yeah, they absolutely could. So could they get into some nutraceuticals that are connected to disorders that aren't prescription drugs? Yes. And I think that could be helpful. Some sleep drugs are so serious though that they'd have to really navigate that pretty closely. Like sleep drugs are not, they're pretty serious drugs. So
AI?
Well, you saw who they hired, someone from Amazon who apparently, I have to say, that's one of the funniest things in the disclosure of either the proxy or his hiring, or one of the things is that he said that he built the backbone too. And then there's a long list of things that he built. It was Kindle, AWS, logistics. It was like, now if he's the Galileo of Amazon. But I figure that it's like drug companies. A lot of resumes, someone will say, well, I was responsible for the launch of, and then pick a drug. And 20 people, 50 people are probably claiming that they helped launch Wegovy at this point.
In addition to the Amazon exec Nodder, there's Mo, who comes from Cruise, the self-driving car company. He just joined as the CTO. And Dirja from Robinhood. She led their Robinhood Gold membership subscriber program.
Yeah, they're making a push for it. AI is going to change everything we do. So my guess is that they need to figure it. Any consumer-facing business that has a lot of people touching things, they can probably automate a lot, but also to get me to what things are best for me, what my intake form looks like. So I wouldn't call them an AI company yet, but it's healthcare and AI is it's transformational. It is where all the smart money in VC is going into AI related things.
Would you call them a tech company?
They're not a consumer products company. In a way, they're a tech company. They're their own. I mean, telemedicine hits a lot of different things. They're a wellness company. They're if they do it right, they're going to help a lot of people. They're already helping a lot of people. And I know I had someone on my own team. He's no longer part of the expert network that we run, but the arguments online, if someone wants to see it on Twitter, just search HIMS, the $ HIMS on my profile. And there's a guy who's like arguing with me. And, his whole thing was like diminishing people with erectile dysfunction, saying things like, oh, they're just an ED company. And I said, well, first of all, what are ED patients not people? Like, are they, well, these are college kids. I go, no, that's not how ED works. Like college kids don't need ED drugs in general. And they're not consuming, it's not a party drug. So a lot of people just need to be educated that HIMS isn't, ED drugs only, first and foremost, but secondly, that the patients that they're treating are people who may not want to, may have agoraphobia and don't want to see doctors, may have just social anxiety. They don't have the time. I mentioned that so many people don't have the time to navigate this horrible system we have. And they don't have the money. So to me, trying to diminish patience is really disgusting.
Well, we've been going for close to 75 minutes.
Holy moly.
So thank you, David, for your time. I do want to close with a little bit of chatter about valuation and price targets and stock dynamics. HIMSS continues to be the most shorted stock in the S&P Midcap 400 as of June 30th. So that is after the Novo deal exploded. 38% short interest, 68 million shares short. Insanity? Or do they know something that we don't? At minimum, how would you explain what's going on with the short interest?
So some people don't like Andrew. They went after him after his somewhat misguided thoughts about Palestinian protests. Right. And I think that caused a lot of people to be like, I'm going to short them. And then they just kind of stuck with this thesis. I think the other shorts, probably the vast majority are, there's going to be a slowdown at some point, and that's going to crack. And it's a high valuation on the current earnings. I think it's stupid. I would never short a company that's growing like this. I would never short a company that has effectively no debt. I mean, I just wouldn't. There's no. That's why I'm hoping that they put up a good quarter, because unless it's a mitigated disaster, what are you going to make? $5, $10? So, and don't get me wrong, making 20%, 30% is fantastic. I don't. That's not how I invest. That's not how I would suggest people investing. I think that it's set up for a great short squeeze if they put up a good number. I think when we got to $70, you could get the idea of what happens when people have to cover these short positions. So if I were still at Balyasny and my colleague were short, I'd be like, good luck, you're going to get your head handed to you. Or you're just playing roulette at that point, or flipping cards. You don't have a basis for that. Because when I get down to the valuation, and I looked at the valuation that you post, I don't know why you don't allow it to be downloaded. So that's one question.
The valuation model?
Yeah.
I'm happy to send you it simply because it's a subscriber business. And like, if I shared the link, people would have it.
I'm a subscriber. You have to trust your subscribers.
Even after they unsubscribe. And in newsletter businesses, it does happen.
All right. Well, either way.
I'm happy to send you the.
Okay. So I'll tell you, I looked at it very closely. It's very, very reasonable. I have my own model, and I'm just going to pull it up here.
I'll just say, I think like our base case was in the low 60s. Right
now.
No,
I think it was low. I think it was lower than that. But that said, look, I'm at, for 2027, $1.52. 2026, I'm at 97 cents, and this is what I would consider
this is earnings.
This is in earnings.
Yes, got it.
And so I would say that's a pretty conservative number for me, for my model. I consider the model somewhat conservative. I don't think it's some bear case, but it's conservative. So it's showing that there's a 55% growth for this year and 25% next year. Now, who knows what things they layer in? Everything they can layer in, all the better. So if we say earnings are $1.52 for 2027, what multiple should someone put on that? So this is how PMs are going to think about it. They're going to say, okay, well, is that a 30 multiple? Okay, so you're $45. Are you, or if you go out, I'm out a year and I'm at like $2, a little bit above $2, but let's just say it's $2. So do you start working off of 2028? I think 2027 is pretty fine. So you get to next year, you're 2026, you're going on a forward year number. You're okay. Do you put 40 times? Now, the analyst in me would actually do a DCF, or you could look at a sales multiple. The analyst in me wouldn't do a sales multiple, but a lot of people do. So you go, okay. And I heard Martin Scarelli say, I think it could be a $30 billion company. So in 2030, if you were at $6.5 billion in revenue, 4 times sales is $27 billion. Okay, well, that's pretty great from where we are now, and that's only a few years out. So you get to a few different answers on this. I think that I want to buy it at like under $40 because I think like I want to make money. So that's my goal is to make 30, 40, 50%. And in order to do that, I have to buy something a lot cheaper than it is. But I think a 30 times multiple is a base case for a company growing this fast. And I think you could arguably go higher. My DCF gets me higher. So that gives me reason to think that, okay, my multiple can be higher.
Okay. So you think about HIMSS in terms of like a PE, standard PE. I know many sell-siders, and if you read the reports, are using adjusted EBITDA. I think it's the EV over adjusted EBITDA. Which
is actually fine for, I hate that metric for most companies because they have a lot of debt. And EBITDA essentially says, I don't care about your debt. And there are lots of unprofitable companies on a GAAP basis that on an EBITDA basis look amazing. Bausch & Lomb is one of them, and Bausch Health. They're two probably zeros, eventually zeros in my opinion, but people want to talk about adjusted EBITDA. For a company though with no debt, actually their EBITDA is great. It's a good metric. And yeah, you could say, I don't know what number you want to put on it, but 15, 20 times, go out a few years. But
real quickly, why is price to sales a bad one?
I think it's a good one as a rough cut, like to see if things are, but they're not manufacturing their drugs. And price to sales is also, to me, it's the best metric for is something too expensive. So four times sales is a good base case. Like people buy things at 4 times sales. People generally don't buy things at 8 times sales or 6 times sales at this size company. Now they're growing so fast that if someone said, oh, we're buying them for 6 times sales, I wouldn't be like, you're definitely losing money. I'd be like, oh, that's a lot. But, that doesn't talk about, like, a multiple of sales doesn't talk about profitability or anything. And that's another reason why this quarter is so important is we've had some really good growth in cash flow and profitability. In a seasonally weak quarter, can they still show good profitability? Are they constrained in their spending? Like all of these things, go to the maturity of management. Like, are they managing it for numbers? And I did want to talk about the governance because the 2 classes of share, if I was
going to come back to that as a final question. It's like 87% to Andrew, right? Or 90%?
Yeah, 90%.
Andrew.
I think it's a mistake. I think it's it's probably for me, it's a red flag. It's one of those things that's not okay.
What about Meta? What's their structure?
I don't know.
Doesn't Zuckerberg own some insane amount as well? Maybe not 90, but isn't it really high?
I don't know.
Nevertheless, could be like a red flag. Sorry to interrupt. Go on.
Yeah, I think like shareholders should run companies. I don't think they should run the company day to day, but I think they should have a say in it. And I think shareholder rights are really important. And I don't mean shareholder rights as 1/175th of everyone else. I mean equal basis. And that's my worry when I've been on boards. I've been on companies that are of 2 publicly held companies where management owned about 50% of the company. It is having super voting rights is dysfunctional. Even if it's running fine right now, it's dysfunctional. And just to ask yourself, what percentage of the S&P 500 have 2 classes of stock? It's a very small number. So it's not, we can argue that some other big company that's really successful has that.
So Zuckerberg's at like 60. Andrew is even higher at like 90.
Yeah.
Any final questions from you, Patrick?
I am good.
We've taken so much of your time. David Maris, thank you so much for being a part of Him's House. This has been fantastic.
Thanks. I will just close it on one thing. It's one thing to think the stock is worth $40 or $50 now, but then you say, well, where could it be in years? If they execute, I think this is a fantastic long-term stock. I think there are 2 or 3 things that they have to make sure they don't do, which is get distracted, and that they focus on what's their core competency and just keep focusing on that. But no, thanks for having me. I really, really appreciate the discussion.
Thanks for being a part of Him's House.